Hello and welcome to the Friday wrap up brought to you by David Gockstein. I'm your host, Landy, and today is May 15th, 2026, and we are looking at Bitcoin here to start this video today. And we see the Bitcoin came right back down and is now still in the weekly zone. And I say came right back down as if I had talked to you yesterday about this, but one of the things that I did talk about on the Wednesday check-in is that if Bitcoin hung around the 78 to 80 essentially, or in this case on spot 78.4 to the 80,500 to 700 weekly zone that it's currently trading in, that it still has the potential to keep heading up towards the highs, and maybe higher if we start to see 82.5 to $83,000 break. And of course, that's where I'd be looking further up to $85 to $86,000 as a weekly level. And then, of course, 89 to 90, that overhead area of interest above the most recent highs. So Bitcoin did close back down on the low side of this weekly range area of interest, right around the 78,500 to 600 area. And, this is where we await the weekend, of course, to see how price holds in this area. Lower volatility on the weekends, typically, or I should say not lower volatility, because sometimes we do see some decent volatility on the weekends. Lower liquidity environment is actually what it is. So in this case, let's go ahead and turn on the Bollinger Band set here and dig right into price action. Bitcoin is now below the 20 simple on a close, and that is the basis band on the Bollinger Band set here. And let's kind of zoom in a bit. And this is where we can see the setup. If Bitcoin does break back towards the highs, especially over now, in this case, the upper first standard deviation right around the 81.1 region or so. So that means that Bitcoin's trading above this area of interest on the weekly, around that 80,500 to 700, towards that 81K. I would expect it to try for at least these local highs, in the upper 81s to $82,000 region, and then anywhere above there, I'd be looking for another test of the $82.5 to $83,000 monthly close open area of interest. That being the previous monthly higher low on a close open basis there. With the wick that was at 74.4, of course, that close came in at 82.5 on spot. Anywhere above there, of course, I'd be looking for that, 82.5 to 83 on closes. I'd be looking up to somewhere around 85 to the weekly here at 86,000. Anywhere above there, 89 to 90 is fair game. Now, if Bitcoin does drop this area, can it swing down to the lower first? As long as it was going to recover back above the 78.4 here, yeah, it can kind of stave off, further downside, at least temporarily. But it would start to look like if this area was lost, especially on closes below around $78,000 that do start to push that lower first. It's now coming in at 77.5. I would start to look right back to where the lower second, lower third is lining up, and that is at $76,000 to $74,000 here. That is going to be in a very important area. If Bitcoin were to settle in and around that area, it would still preserve potential, upside, provided it could get back through the 78 to 80 back to the highs and potentially higher. But it would start to look like it would want to come down below, on closes below $74,000. It would start to look like it would want to get expansion into the next area of support. The primary area being 70,500 to 72 to 72.2 here. That, of course, is the top side of the range after the lows are put in. And that kind of, the $60,000 spike down, we had the spike up. We had some higher lows, lower highs. We had a little bit of a higher low close, lower lows, or higher low close, higher low swing here to a lower high. And then finally carving out the bottom side of the range there at, 62.5 to 65. So this would be an important test if we did see things come down specifically and break through that 74 to 76 and start to get that expansion into this zone between 70,000, 70,500 and 72 to 72.2. If we did start to see that area being reclaimed by the bears, we'd have to entertain moves to this shorter term area around the prior cycle all-time high at $69,000 to around $68,000. This lower high that got the trend break off the higher low that led to this move up. This would be a very important area if that, of course, was recaptured. I'd be looking, well, to be quite honest, anywhere below 70K, I'm looking for this entire zone to be viable in terms of price action. All the way down to the bottom side at 65 to 62.5. Anywhere outside of that on the downside, I'd be looking 58 to 60 in the mid 50s and lower. I've talked about this quite a lot. So is that the first thing to start looking for? Is screaming about 62.5 to 65, 58 to 60 right from here? No, watch it. See how Bitcoin holds up in and around these areas. More immediate availability for continuation to the upside in the auction would be, sticking around these $78,000 to $80,000 closes. And I do mean closes because this is based on closes. And only if we start to see closes below around $78,000 would I start to really look between that $78,000 and $76,000, this area between these two areas of interest, right? As the first area to look for. And then anywhere below $76,000, that's expansion into the local support here, around this spike high and encompassing this high deviation of this tighter range before the move back down to 65K. And then anywhere below there, that's full on expansion down into retest the tighter range down there. So just be aware. Now, I've mentioned this a few times. On the weekly, I wanted to see closes above around the $80,000 level. We've seen that now. And I want to kind of point out that if Bitcoin can come down here, even on the weekly, and hold the basis band or $74,000 to $76,000 area, we're likely going to see the upper first start to head down towards this monthly around that $82,500 to $83,000. It's currently sitting at $84,600, likely going to head down, another $1,000, $1,500 on the close this weekend. But if Bitcoin is hanging out above the basis band on weekly closes, or if it comes down to test that area and begins to bounce back up, provided it doesn't get, local accumulation and then a move back up, you can see that after getting above, the 82.5 to 83, 85 to 86 is the play. And then up to 89 to 90, anywhere above there, you can see that we have now a new set up there by the upper second. This is a weekly zone of interest up here. That is a higher low that I pointed out before. That's that higher low close that put in the $89,000 higher low that we also saw the lower high come off of. So we saw in January of 2025, the $89,000 area as the swing low. We had the closing low come in at that 93.5. That is where the upper second standard deviation is. And that's where you're going to see, like some people talk about, 93.5 to 96. They could see the rally extend to if it remains strong, especially on the daily. And then only really for many that are looking at this as a bearish retest, only above $98,000 would things really change. And of course, that was a higher low off of the high side uptrending structure here that also got the lower high there that led to the impulsive move down to 60K. So big zone if that were to happen. Not my first take on where price action is headed from here immediately, to be quite honest. We just hit that big monthly at 82.5 to $83,000, that monthly higher low close. And that really is, on an extension, I'd be looking 85 to 86, 89 to 90, maybe a swing into the low 90s for that 92 to 93.5. There's some areas of interest at around 92,000, but this is all bearish territory. This is bearish retest territory rather. And I'm not looking at this, even if this low was to be solidified at $60,000, I think it's going to take time. We need to see that next big correction on the weekly and where it comes from. And that's really going to tell us a lot about whether or not $60,000 is the macro low area of interest. And that's, it could even get swung below. And that 60K, I'm doing quotes with my fingers here in the background that you can't see. But, like kind of air quotes, even a swing below it and a buyback above it would kind of solidify it kind of thing. But the next big move down on the weekly time frame, or correction on the weekly time frame, once a high is put in, whether it's here or higher, which, you got to entertain that it might be here, and we'll get that information this weekend. Quite honestly, it would be on closes below last week's low. In this case, would start to really look like, okay, high might be in, but we'd have to watch for potential sideways consolidation and chopping around before it's really ready for a correction down on the weekly time frame. I would say the daily does look like it wants to correct down some more, but that doesn't mean that it can't hold these areas and maybe just swing down for some liquidity. But in this case, if we did see closes below 78.2, so again, closes below around $78,000, I would be looking at this as the high being set. And that's where things get pretty interesting. If we do start to see this moving back down, then we really just have to pay attention to, the daily areas of interest, but from the weekly perspective, right? You've got higher low. And let's say, for instance, that this, the monthly zone that was just hit around this 82.5 to 83 was the high. You've got a higher low, higher high structure, and then it's all about, does that structure hold, right? So I would tell you from a daily perspective, if we start breaking back below that 70 to 72, that's where I think that this low, around 65 is well in play, and potentially lower to the actual low there at 60K and more, potentially down to 58 to 60 where the lower second is, and maybe even more down to the mid 50s. And more interestingly is some of the structure over here. If we look at where it was getting the 58 to 60 area as an area of interest, it was originally because of the initial move down, right? We had the lower third on the initial move down that broke structure at 80,000, 80,500 here. This candle lower third was right here. It was at 58, which is this low. And I've talked to people about, I've talked to you guys and many others about how I utilize the standard deviations. And in this case, it's the following week, once we got that close and we open up the next week, it's the prior week's lower second and third that I'm watching very carefully. So where was it in that case? If we broke below, in the lower second close was, right around the $75,000 region, which was a big area, 75,000, and then anywhere below the 74, 420, 69 here. I was looking for a move down to the lower third, somewhere between 58 and 60, and that's where the lower third was on that weekly. So I was using the prior week's candle and closing read for volatility to gauge the next week's candle. So in lower term timeframes to break below 75, I was looking for, logically, looking at the support and resistances here, but also from the weekly perspective, I was looking at, if it breaks below where the lower second was the week prior, then we're looking to where the lower third is. And what I want to point out here is I'm watching the bands very carefully on the lows. We see that the lower second is now curling back up towards this low. And this was, we had the downtrend here. We had the lower low close, but the higher low swing with the trend break to another higher low at right around $58,000, 58 to 60. But if this is taken out and the lows aren't just swept, but taken out on a closing basis, and we're going to start to see, even on any kind of a move back down, we're going to start to see that lower second hug this 58 again. If we were to go and, for instance, not maintain this lower term, what I would term as a bearish, as it stands right now, a bearish move up. If this weren't going to hold and 65 was taken out, I'd be looking right to this area, because if it broke, then we're looking mid to low 50s and potentially upper 40s. And the reason why I bring this up is because 49K was the ETF high over here. This was the run up into ETF, into the launches, right? of all the spot ETFs. And then we got a big sell-off right after they launched, right? And then they came down and they hit a major monthly level. And it was actually a close open at 38.5, almost to the dollar. In fact, it was $1 off on spot. And in this case, the next big area, should this weekly area be lost, is just the low side structure and then the high side spike right there. And you can see lower third standard deviation is going to work its way in here. And that's going to encompass the, the upper 40s. I would even say that you should go over and grab this, lower high, the start of the bear market over there at the 48,240 to 49K spike low of that structure. So like 48 to 50, and then potentially we gauge it for the mid 50s, right? From there. That would be in a bearish scenario. And I think the upside would be limited, right? The band setup doesn't show that this is ready to take off anytime soon, in terms of we're going into, a bull market. This is the next leg. You missed out, all this other crap. That's just complete BS. This is going to take time, even if this low is going to, be carved out as the macro low around 60K or somewhere around there. Even if that was the case, this is going to take a while to work out. The band setup is not one for volatility that I'd be looking at as, oh, hey, this is the setup that is, it's all ripping and ready to go. No, because we're going to be in for a carve out period. And that's actually what you would want to see, a carve out accumulation period to really solidify this area as the low, not just, your W bullish formation that's actually bearish, with no divergences coming off the lows here, for strength, and I'm not looking at it that way. And I don't think that many would be. So I think that there's plenty of time, to get your thesis down, get your plan down, and accumulate, if you haven't done so. Even if this were to just absolutely rocket to the low 100K region, very highly likely get a very large violent correction from there. In fact, the faster that it would get there, the more unlikely it would be that this is actually the low. And this is quite a big move up. I haven't been fading it. We've been looking for this move off of the lows, provided it met, getting outside of that tighter range off of the initial bounce off the lows, between 70 and 72. And then that, 65 to 62.5, we've been looking for. As long as it's heading towards that top side, we have a very good chance of going up and retesting the structure over here on the bottom side by the weeklies and the monthlies, and then potentially even the top side up here, which we haven't quite gotten that top side, but that's all bearish retest areas, right? And the main reason that I'd even be looking at any of that is if we retested further up towards the 86 to, even $89,000, that is the bulk of the bottom side structure on a close open basis for what was being carved out as a base, off of that initial spike down to the $80,000 region. So that's still bearish retest areas of interest. And it wouldn't be until the high side of that structure got taken out that I'd entertain the possibility that, yeah, it's going to be very hard for the bears to push this down for like another full leg. So right now what I'm trying to say is it's still very highly unlikely at this point in time that anyone can, with any kind of confidence and data, tell you that the macro low is in. And even if it was going to be confirmed to be in with the current low at 60K, there's going to be plenty of time to position and accumulate. I think this is going to take a while. All right. I think I've made my point pretty clear. Let's go ahead and address a few different things. So for those of you using TradingView, and specific aggregators that are using futures for oil, Nat and I talked about this on a space this morning. The reason why, and for those that don't know Nat, it is Nat on X. She co-hosts the ATC show. She's a regular guest on Wolf Bitcoin. And of course, David and I were having some fun with her in the audience the other day on the breakdown at 12 p.m. Eastern, of course, every day with David's show. Now, Nat brought up a good point, and it's something that I don't really talk about a lot because I guess I should give you the edge, right? This is the edge. You're going to get finer grain rollover movements for WTI CFDs on WTI or CL1. You're going to get the finer grain rollover contract prices, and this is always going to be a day lag, right? So what you're going to see is the session from Friday play out on the Sunday into Monday session close, right, for futures. And she made a good point that the June futures contract actually was closing up towards the 105 region. It's going to look very different if you're going to be charting and gauging price. I would encourage you to continue to use U.S. oil or CL1 or whatever your favorite is on TradingView, because you're getting the rollover dates. I think expiry is going to be on the. Let me go and check. I think it's the 19th. Let me check here. Yeah, Tuesday the 19th is when when we have some June expiries coming up. And something that she noted today in conjunction, she's like, hey, have you looked at the spread between the dailies, right? Because if you go to certain aggregators and certain exchanges, you're going to get different feeds. But the feed that you're usually going to be seeing as your main feed is going to be the CLM2 on TradingView, which is the 2026 June contracts for WTI crude oil futures. And it's going to look a bit different, right? You're going to get in this case, it's a very different structure. You can play this and chart it, right? And you're not going to be wrong, right? But one of the big things that I would stress is that the shorter term and volatile movements, if you want to be able to capture that and chart it out, you're going to need to, I would go with the futures that have the rollover stitched together data, right? And so one of the things that we talked about this morning is you got the contracts from prior day closing catch up kind of information going on with where U.S. oil and the CLM2 were actually trading pretty far away from each other, which is indicative of volatility within the markets because you're getting more of the daily settlement cost for that contract, right? So, and then you're getting the rollover contracts that are stitched into the CL1 futures contract. So. And you can go to, you can check, you want to do a sanity check, you can check between the two. I don't usually talk about this because it gets really in the weeds for a lot of people just kind of looking at like, well, oil's going to go up. What are the areas of interest that I should be paying attention to? I like to just keep it simple. I like what most, retail TradFi is going to be looking at is CFDs on WTI or US oil as the ticker. And you're going to see the lag period. And if you see that there is a bigger divergence between the futures and settlement on the daily, which you can go and you can check. In this case, I believe, it's CLM 2026. So this will show you the actual contract. In this case, you're gonna get that on some feeds, and you're gonna get the actual WTI CL1. On other feeds. So when you see a spread like that, that's indicative of volatility. In this case, demand, right? Demand is jumping because there's going to be more stress on supply post China meeting. If, and remember, this is futures speculation, right? And settle price and futures price can get out of whack like this day to day. And with the China news of potentially buying, it sounds like they're going to be buying U.S. energy, right? U.S. oil and U.S. natural gas. Sounds like that was discussed. And that is one of the things that's going to be coming to fruition, which is a big change, by the way. China coming to the United States for energy. So naturally, there's already a lot of demand on onshore energy, right, for the United States. Can the United States meet those demands? Absolutely. But remember, the more demand in regionality is going to push prices up. So we're already getting hit hard in the United States with all of these different countries sending tankers into the Gulf of America. You've got tankers going over to Alaska. It's a lot of demand for onshore and it's all about onshore inventories, right? That fluctuate week to week, and in some cases day to day, right? But usually we're measuring them week to week. And in this case, this is more expected demand on supply that, yes, is ramping up, but we'll have to just see how things kind of shake out. But I wanted to address this because I thought it was a brilliant conversation to be having about this, because as soon as she said it to me, I was like, oh yeah, settlement. Yeah, it's daily settlement. So, but the support and resistance zones of interest are still going to be of interest. So one of the things that I wanted to point out, even though you're seeing what the Friday the 15th is reflective of the 14th settlement and closeout, right? So you're seeing the 101.15, when above the 102.5, when you see this in lower term timeframes, you're looking to 105, 107, still the same areas of interest. Above there, looking 110 to 112, where this high is coming in, and anywhere above there, I'd be looking for expansion back into the overhead resistance, 115 to, of course, 120, and potentially even as high as 130. Now, I think it's very important, and I hope that I didn't confuse the crap out of everybody with settlement, which is one of the reasons why I don't typically bring it up. But I just thought it was such a good point to make that, and I've got, some of you out there are really deep in the weeds with this stuff and know this stuff like the back of your hand. And I think that it's important to illustrate and start introducing other people who may not know how to research or where to go to look to find these discrepancies or what it means and how it works, to go and actually do that research. And I said this to David, and I know, we joke around on his show in the morning. I said, I was talking about, it's all about oil. It's all about energy, and realistic. I made the point of saying that, Bitcoin is energy was my lead up, right? But when you're looking at economies around the world, and this is something I think is really important to understand, energy is what makes an economy. All right. You have physical energy, right? And infrastructural physical energy that keeps the lights on, keeps the cars moving, fuel, oil, right? Keeps manufacturing facilities going. You've got coal, you've got electrical, and like all of this stuff. But at the end of the day, what the situation in Venezuela and the situation in the Middle East has proven out is something I've been saying for a very long time. And I think that Trump is purposely proving in real time, especially to our European friends who just are enamored with the green energy crap, is you can't build your green energy crap if you don't have oil. All right. Sorry. I hate to be the bearer of bad news, but you can't build out your green energy infrastructure, which I think you should be building. But you cannot completely cut out oil, i.e. California. We're going to not have any gas. Bullshit. All right. You're not going to have any gas cars for citizens, but you're going to be having gas trucks all over the place from out of state delivering all kinds of fossil fuel based energy or coal based energy to California, or you're going to be importing it from overseas when we could just drill here. It's really what it highlights is, and what this entire situation has highlighted is the fallacy, the pipe dream that is being sold out there, that you can just switch over your source of energy and you're not going to take the hit to the economies if something bad happens, because that's always been a fear. And these points were raised a long time ago when the green energy stuff started to really become popularized. And to be quite honest, this entire situation has sent Europe into absolute chaos when it comes to energy pricing, right? And now they have to readjust. I call him Crying Carney, just before Trump's trip over to China, was crying about this entire situation and what are they going to do and how are they going to form these alliances and with who and how and where and why and when, because most of the countries that are heavily reliant on imported energy are not producing energy and don't have any real big backup plans, and pissed away a lot of people's money on the green stuff that they never actually built out sustainable infrastructure for. So there's a lot of people waking up in Europe and Asia especially that signed on to this stuff, and energy makes the economies go around. It makes the world go round. Okay. When there is stressors on oil in particular, or other squeezes in other areas or sectors of energy, and for those that understand natural gas and liquefied natural gas, especially in Europe, you understand what I'm talking about. What ends up happening is the entire economy slowed down when those prices increase exponentially, and very quickly. And then you see that they hold on for longer periods of time. And Europe and Asia are getting slammed, slammed, much harder than the United States. And in fact, the United States markets have been a place for capital to flee to. Now, with this larger pullback that we've seen today, and a new all-time high actually being solidified as a high side structure for something like SPY, NASDAQ, and of course Dow didn't quite reach its new all-time highs, but it did run the high side structure, 50,200 there. But when looking at SPY, I've got the prior structure marked here. We can just go through this real quick. I don't think it's any kind of secret that if I've mentioned that if you see oil prices rising, you're likely going to see a roll in risk, a rotation in risk. And what we've seen so far is that VIX still remains low. So this is profit taking. It's a matter of where does this correct to? And do we get a substantial rise in VIX? I would argue that we're likely going to see this continue to melt up. I don't think the ARB trade unwind is ready yet, in my opinion. And that is where it's bidding prices up and you see futures shorts building up. And then that trade is squeezed. The ARB between it is squeezed, right? You're starting to squeeze where your entries are up into where your short side entries are. And once that ARB is squeezed, I'm oversimplifying this, by the way, and some of you know why. But essentially, as soon as that ARB is squeezed, you unwind one side of the trade. What do we typically say that you unwind? It's very rarely the short side that's unwound. It is the long side that's unwound. And then the short side is ridden down. I don't think that trade is ready yet. That doesn't mean that we can't get massive moves to the downside, especially if we see that oil prices continue to break through to the top side areas, especially towards the highs. Again, watch if infrastructure is fine in the Middle East and it hasn't been hit or destroyed, it's temporary. It's a trade. But if it is hit, we're probably seeing sustainable, sticky, higher prices that could, exponentially increase to some pretty nasty levels overhead. But this is where, we're getting an initial pullback and gap down in SPY, NASDAQ, and got the little bit of a sell-off here in Dow. I think that this could still melt up, and what you need to pay attention to now, much like I said on Wednesday, is the last higher low in the daily for SPY. All right, so coming into, and I keep an eye on futures on Sunday, but coming into the open on Monday, watch 730 to 732 at the higher low here. If that is dropped, I'd look for a nice little gap fill somewhere around the 720 to 725 region here by the basis band. If that is lost, then we have to start looking down to 710, 715. And again, just like I've been talking about to the top side, we hit all the targets I've talked about. I talked about 750 back here when we were, around this area here. So we were looking at 750 on this initial pullback as a potential to the upside, potentially even 755, which is still in the cards, by the way, as this is an uptrend. We haven't seen any kind of consolidation to compression, so any kind of really big move down back towards the 710, 715 region, probably going to get some pretty intense buybacks off of that lower first, and potentially even retests of this 690 to 695, probably pretty big bounces there, or at least finding a lot of volume. And of course, on the way down, if we went down very sharply, very quickly, is where you're going to see VIX jump up pretty intensely. And, we did see a nice little bit of a move up in VIX. I talked about this weeks ago at this point, is that I was being a little bit more aggressive on grabbing some VIX contracts. And in this case, VIX and VXZ. Main reason why is I'm building out, and because what I'm really looking for is the below the 15 read. It's kind of best practices kind of stuff, pretty rote standard stuff. But I'm willing to build out a little bit early to capture some hedge off the long side. From that really big move down off the lows. Grabbing a lot of long contracts, so gotta get some hedges in. I have not built out and am not looking to build out any kind of hedge positions just yet off of this initial sell-off and move down. I'd be watching it very carefully and looking for it to meet conditions. Above 750, I'd be looking for 755 to 760. Potentially, up to 765 by that upper third. This is a grind up, and sharp corrections down are kind of normal stuff. Even if we did get a nice big correction down to the 690 to 695 level, I'd be looking 680 to 685. And I've mentioned this before. A lot of people looking for a 10% correction, and that's right on the edge of a 10% or even a nice little swing down. I'll be honest, if it's going to go for the gap, it's probably going to go for the full gap fill, like a 12% if it was from here, and it would probably be a trend down with some sharper moves down if this was going to be the high for now. I don't think it's finished yet. That doesn't mean that it's not finished yet. That's just my personal opinion. We need to see trend crack, and then we evaluate off of any kind of a lower low structure, lower high kind of availability, and then compression, and then possible resolution. If we get sharp moves from here, I think the buyback is pretty intense. I'm not even going to bother with NDX and Dow. I've been talking too much. We're already at 36, almost 37 minutes. A lot of stuff to cover today. I think that post Z trip, we could potentially see, a little bit more profit taking. Maybe that leads to some smaller unwinds, maybe even to some bigger unwinds. I would start to pay attention to what's happening overseas in Japan as well in the bond market. For those of you that do like to watch that stuff. Otherwise, refer back to the beginning of this video when I just talked about Bitcoin, if none of this other stuff made sense to you. And with all of that, I would like to tell you, I appreciate everybody who likes and shares these videos. Please go ahead and like and share this out there if you did find this information helpful. Your support really does go a long way and really does help others and help me, right? Because in many cases we get to talk in on spaces and other places where you're commenting either live or in the comments. That allows me to flesh out more of my view of the markets as well. And I really do appreciate all of you that are bringing up really good points about other areas of things that I haven't concentrated on looking at on this particular show. But I'll be back here on Monday for Macro Mondays. You should be able to find me on Monday also at 12 p.m. Eastern Standard Time on David's show, The Breakdown. And I might pop up on Rob Nelson's show on the Goxstein Network. We'll see. We'll see if I have some time. He does some evening shows, I believe Monday and Wednesday. But I also do these videos every Monday, Wednesday. So we'll see if maybe I adjust and record the video before close or something. All right. You have a great weekend. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. Of course, as always, stay safe. That's the most important thing. So trade safe, stay safe. Have a great weekend. With all of that said, Landy out. Take care.